Welcome to video podcast series At CEEntre Stage. I'm your host, Saša Sodja. In this podcast series, we explore the latest trends, regulatory updates, and pressing issues in the dynamic economy, focusing on booming industries and sectors. In this episode of CEEntre Stage, we delve into the topic of insuring M&A deals, exploring the significance of warranty and indemnity, W&I insurance, in the current challenging political and economic climate. Our guests, Marcin Stoń, the head of Transactional Risk Insurance, Private Equity and M&A, CEE and Eastern Mediterranean from Marsh McLennan, Alexander Rakosi, a partner at the CMS Vienna office, but with the CEE focus, and the head of private equity, and Saša Sodja, a partner in cooperation with CMS Ljubljana office. Discuss the key benefits of disadvantages of W&I insurance and address common objections and fears from clients. The guests also share their insights on the future of W&I insurance, discussing the potential for increased interest and use in the CEE region. Despite a recent slowdown in M&A activity in Europe and the CEE due to factors such as rising interest rates, inflation, and the conflict in Ukraine, the significance of warranty and indemnity insurance is increasingly relevant in today's challenging political and economic climate, as its core purpose is to help protect transactional parties from merger and acquisition M&A deal risks. To kick off the discussion, can you explain to our listeners the basics of warranties and indemnities in the context of M&A transactions and their importance? Marcin, what are the key benefits of W&I insurance?
Sure, and thank you for having me at this podcast. In the vast majority of contracts that regulate the sale of the company, and whether they are called share purchase agreement, acquisition agreement, or investment agreement, there typically is a chapter or even a separate document where the sellers would give warranties to the buyer. The warranties given by the seller can relate to various aspects of the target company operations, such as assets, tax, accounts, or compliance with laws. Now, if any of those warranties proves to be incorrect, the warrantors, mainly the sellers, would remain liable to the buyer for the resulting loss. And that's where a warranty and indemnity policy becomes relevant. Under a W&I policy, a third party, an insurer, would assume liability for breaches of sellers' warranties given in the acquisition agreement. At Marsh, we work with a wide variety of clients and deal makers on both sides of the transaction. Depending on their role in the transaction, their motivation to obtain a W&I policy might be different. In general, an insurance policy can bring benefits both to the sell and the buy side of a transaction. For the sellers, it means a clean exit. In other words, the seller can shift all the liability resulting from a warranty breach to an insurer. This is especially important for private equity sellers that very often liquidate a fund following a transaction. Another benefit for the sell side would be the fact that they can receive all the proceeds from the transaction immediately at closing, rather than, for example, holding them at escrow for several months or even more than a year. For the buyer, a W&I insurance policy can provide a better and wider protection than the underlying contract. So the insurer can be liable, for example, to a higher amount than the seller would be. Another benefit of a W&I policy for the buyer would be the fact that it it increases their comfort when it comes to an investment in an unfamiliar jurisdiction. For example, we have recently had cases where we advised clients coming from distant jurisdictions, such as Asia, that were investing for the first time in our region. And in that scenario, a policy significantly contributed to their overall comfort with the transaction. Also, our clients appreciate the fact that we work with very solvent and financially strong insurers, which gives them additional peace of mind when it comes to a potential claim, because very often the buyers would have some doubts around the solvency of the other side in case of a claim. And finally, the policy can serve as a tool that facilitates the negotiation process. In other words, the presence of an insurer and the fact that transaction is insured positively impacts the dynamics of the negotiations and allows to agree on some important clauses in the agreement much faster than it would be the case without a policy.
Okay, thank you. Let's hear a different perspective on this topic. Alexander, based on your experience, what do your clients see as the main advantage of W&I insurance? Can you share an example of a transaction where W&I insurance delivered a positive effect to all parties involved?
Sure, and thanks for having me. I think as Marcin already said, the focus is on risk profile sort of optimization, and that goes both ways for sellers and for buyers. For example, if you're on the sell side, a W&I product provides an opportunity for you to, as it's called, dressing up the bride, meaning serving up in an auction process, for example, an optimized risk package where you can deliver to the prospective bidders already a solution that basically allows the buyer to take over an existing W&I prepared product in order to optimize the risk potential. For example, if you have multiple sellers involved, even more so if it consists of individuals, you oftentimes, without the W&I product, have the negotiations on joint liability, several liability. Are you able to recoup the respective, let's say, risk profile from individual sellers, which in many times sort of constitutes a big roadblock in the negotiations. If you're able to provide the counterparty already with a liability regime by, as Marcin said, sort of a more creditworthy seller, then that usually provides a pretty big advantage in terms of getting to a deal very smoothly. On the buy side, as it's called, sweetening the bid, if a buyer already has prepared a W&I cover, it is able to offer to the seller a much more favorable liability regime. In many cases now, what we call a zero recourse. So ideally, you would have, as a buyer, sole recourse against the insurance company and leaving as little of liability as possible to the sellers, which obviously makes it much more efficient and much more easy to come to terms with the sellers. So that is sort of a dynamic that is quite relevant and is quite favorable in getting deals across the line. With respect to recent examples, those are some of the core constellations that you typically see. For example, we had a private equity fund acquiring a business from existing owners of a company who did not fully sort of divest of all their shares, but who stayed in the whole buying entity in the form of a reinvestment. So obviously there was strong interest to not just only align risk allocation profiles, but also make sure that the parties who were going to continue to work together in the future, that they sort of were able to focus on the business as such and not have to deal with any potential claims stemming from reps and warranties in the future. So it did allow the parties to really already dive into the substantive side of things and sort of focus on growing the business, and allowed the PE buyer to still get sufficient coverage in terms of financial capability standing behind potential claims. Another situation that we had, for example, was on the corporate side, where this sort of a multi-billion-dollar group sold one of its divisions. They wanted to use the acquired purchase price as soon as possible after closing, so there was a strong incentive not to have any type of escrow structures, holdback structures, or any of that stuff. And the buyer, which in this case was a private equity group, got comfortable that it had a good enough counterparty on the other side, without any holdbacks, without any escrows, simply by being able to rely on the financial capability of a big insurance group that stands behind this. So I think these are just some of the scenarios where we do see that the W&I product provides added value, and where it facilitates the transaction in order to make them speedier, sort of more optimized, and I think in this case, in the interest of both parties.
Thank you, Alexander. Saša, any additional thoughts about it?
I agree with everything that Alex said. I mean, the advantages are pretty clear. Don't want to sound like a commercial, but, clean exit is always what the sellers are looking for, and having a W&I insurance in place, can reduce any holdbacks of the purchase price. I mean, reduce, not like to completely remove. Also, it makes the negotiations with individual sellers much easier, especially if there are more than one sellers on the other side. And from the buy side, you get to avoid any lengthy court procedures and pre-transactional restructuring. Okay.
According to the CMS Emerging Europe M&A report 2022-2023, the CEE region is trailing behind other Western jurisdictions in the use of W&I insurance and transactions. Saša, in your opinion, what are the key reasons behind this disparity?
The statistics are improving. They're improving slowly, but they are improving. I think this is due to the lack of familiarity with the whole product, but also due to other reasons, such as exclusions in coverage and the level of cost, the complexity of the whole underwriting process. I mean, in relation to lack of familiarity, usually businesses in legal matters are used to do things the way that they have done them before. And even though objectively insurance provides simplification, it's still not perceived as such due to the additional steps that they need to take before signing the deal and to purchase the insurance policy. It's a great alternative to escrow accounts. So in the higher value transactions, like already Alex said, the parties are more inclined to explore the possibility. But in lower value deals, it's the cost of the premium mostly makes sense only if you're buying a distressed company, or if you have an individual on the other side that cannot really vouch for any damages and indemnities. In relation to coverage, most of the risks that do cause a divide between parties in the negotiation stage are known risks, and generally W&I insurance does not cover known risks. And of course, there are some blanket exclusions, such as data protection matters, tax, and environmental risks. These are generally excluded. So this is something that usually the parties fight about, how they want to allocate the risk. And if the insurance doesn't cover that, then it doesn't make sense in their heads to purchase the policy and have an additional cost. And I also think there's like this subjective element of why the W&I insurance is not used as much as it could be. I mean, if it's planned for the start, it's easier to kind of blend it in the whole timeline of the transaction. But if it's not, it's kind of, and somebody wants to introduce it, it's kind of subjectively seems to clients as if it was forced by the other party, and you kind of bring in a third person into the transaction, which is supposed to be already negotiated and confidential. So, once the SPA is more or less negotiated, none of the parties wants to hold back the signing and, have someone else meddling with the SPA. I think these are the most apparent reasons. in the CE region.
Is a lack of knowledge the only factor behind the underutilization of W&I insurance in M&A transactions, or are there also challenges and risks associated with warranties and indemnities that discourage companies from using it? Alexander, in your opinion, what are the key drawbacks that still discourage companies?
Yeah, I think it builds on some of what Saša already said. I think it used to be just pure unfamiliarity with the product. That no longer, I think, is the case in a widespread manner. But I think what is still lacking oftentimes, or there's a less of an awareness how specifically a product can be tailored to fit the particular situation. So I think there's more, let's say, more sort of parts in the toolbox to make it tailor-made for the particular situation. We're talking about enhancements, so there isn't just the basic product. You're able to supplement the basic product with certain things such as, more damage categories being covered, different types of, disclosure concepts being covered. You have different situations, whether or not you have a split signing and closing, so whether you have reps at signing and the closing that you need to have covered, which entails bring down mechanisms and other stuff. So these are some of the, let's say, specifics that if you're not using the product very often, you may find it a bit cumbersome. I think if you have used it and if you're sort of involving experts, then oftentimes some of the perceived, let's say, drawbacks you can find a way around, or even use it to your benefit. And then also, there's still, let's say, the perception that how does the claims handling process work? Do we even get to put in any claims? Aren't the insurance companies resisting that from the beginning? So those are some of the, I think, let's say, conceptual drawbacks that still exist. And then again, as Saša said, I think knowing when to sort of start using the product is key. I think if you, on the sell side, for example, fold it in at the very beginning, it is able to really impact the transaction in a positive way. You can sort of, let's say, do away with a number of headaches that you would otherwise face. Whereas if you sort of throw this in at the last minute, like anything else in a transaction, not just W&I, it causes some more time delays. It causes maybe some, let's say, discussions at a time where people are already losing their nerve. So I think it's just the awareness as to when to place it properly. And then I think another drawback on the substantive side is that it's still a requirement. The due diligence is the basis for sufficient coverage, and there just are certain areas which parties tend to typically, I don't want to say ignore, but not focus on in their due diligence. And it just, generally speaking, isn't possible to have a good cover if you haven't properly diligenced it. So there are some specific areas such as IT, maybe cybersecurity, even data protection these days. So areas that previously used to be almost not insurable, these days are at least within the realistic expectation of getting insurance, but you have to have done due diligence. So due diligence scoping is key for what you're able to do with the W&I product.
Now let's move the ball into your court, Marcin. How are insurance companies responding to clients' objections, doubts, and fears?
Sure. Currently, we are witnessing a very competitive W&I insurance market. We have seen new insurance entering this sector, this line of business, and the existing ones expanding their geographical appetite. This is, of course, very good news for our clients, especially in the CE region, where historically the insurer's appetite was much lower than, let's say, in Western Europe. And now this gap is narrowing. And in some countries, such as, for example, in Poland, the gap has actually already closed, and we can work with more than 25 insurers. The increased competition means that we are able to obtain much better insurance terms for our clients in the CE region. It's true what Saša said, that the product is not as widely used, especially on the smaller transactions, but when it comes to the medium or large deals, the product is, if not used, it's at least seriously considered by the parties. And I have to say that the the deal makers in the region, such as the lawyers or other advisors, their knowledge about the product is already much larger than it was, for example, 2 or 3 years ago. W&I insurance policy, indeed, as Alexander mentioned, is a bespoke product, which means that each and every policy is unique and tailor-made to a particular transaction. And nowadays, more than ever, the insurers are open to out-of-the-box insurance solutions and offer those deal-specific enhancements that can remove important obstacles from the negotiation table and facilitate the closing of a deal. Just to give you an example, right now we are working on a very small, actually, transaction in Bulgaria, where one of the sellers, the majority seller, is not able to give any warranties at all, and insurers are able to actually agree on a warranty catalog and insure that, even though this is not given by the sellers. Furthermore, there has been recently a very substantial investment in claims departments, both on the side of insurers and the brokers. For example, at Marsh, we have also a dedicated claims team who regularly assist our clients in claims scenarios. We offer both our technical expertise and our leverage against the insurers. And when we recommend a particular insurer to our client, we actually always consider our claims experience with this particular market, whether their claims representatives are responsive, pragmatic, and above all, whether they actually honor their commitments and pay claims. Regarding timing, of course, the underwriters from the insurance companies are used to work under pressure and against tight deadlines. However, in order to obtain an optimal insurance solution, we always recommend to our clients to start the W&I insurance stream well in advance, and ideally not later than 4 weeks before the planned signing date. This will allow us to have the best possible policy that can be ready to be issued on the signing date, and actually involving insurer at the very beginning can help negotiate, help the parties understand what is actually insurable and negotiate the SPA, so the acquisition agreement, accordingly. Alexander mentioned also due diligence, and insurance companies do expect to see a customary due diligence in order to be able to insure the warranties. That would typically encompass legal, financial, and tax due diligence. And in principle, any material limitation in the due diligence scope might result in certain area being excluded from insurance. However, it is worth stressing that also in this aspect, the insurance companies can nowadays show flexibility. And for example, they can work on the basis of a internal due diligence if the buyer has sufficient in-house expertise to do that, or they can also work on the basis of vendor due diligence.
Thank you, Marcin. Alexander, in your expert opinion, what trends do you foresee in the future? Do you think the growing interest in the region will lead to an increase in the use of this type of insurance policy?
Yes, I absolutely think so. I think the growing influence of, let's say, regional and international buyers, as they're sort of flocking into the CE region, inevitably also leads to, let's say, higher sophistication of the deal terms that applies to how sales and purchase agreements are handled, that applies to how structuring is done, and I think the same applies to how risk allocation situations are being optimized. And W&I being at the forefront of doing this, we do strongly believe that this trend will lead to the W&I solution being used more often by various buyers across the board and across sectors. And I think this will lead to a growing familiarity also of selling entities and shareholders, even selling individuals, that this is an option that they can pursue. So we do think this is not just a sort of a temporary item that is keeping us busy in deal making. We think this will turn into a pretty regular staple in transactions. And I think just looking at it over the past 10 to 15 years, I mean, obviously, if there's something 10 years ago where we'd only very seldomly see the W&I product even mentioned, nowadays we're not close to what the usage in Germany or the UK is, but I think in a vast majority of cases of transactions, there's at least a discussion as to whether or not W&I may be a good solution in that case, and we see in absolute terms a growing number of deals being insured. So yeah, I think that is definitely something to monitor. And then I think just to reiterate, I think another trend that we do expect to continue is to transaction parties using W&I in a more, let's say, tailor-made manner, and trying to also discuss with brokers such as Marcin and his team how a particular situation can be optimized to fit the situation and to, I guess, align parties' interests even more.
Saša, what is your crystal ball saying?
I agree. I think that the use of transactional insurance in the region will increase. I mean, it's a very practical tool to avoid certain complications in the future. Hopefully, there will be no further disruptions in the region, so the region will not be perceived as carrying more risk as it was in the case in the past. With competition, the coverage should increase, and I think that these insurance policies will become like a standard solution for a more clean transaction. I think, there's only one thing that will not change. I mean, at least in Slovenia, we don't have a lot of large transactions, and with small transactions, cost is also a factor. But I guess that with competition, that will decrease as well.
Okay, before the end, if we go back a bit, Alexander, can you maybe share a real-life scenario in which a client utilized their W&I insurance policy post-transaction and what the outcome was?
Yeah, sure. I mean, I think, for example, we had a situation which was I'd say, somewhat sizable transaction for the region, close to 100 million of purchase price in the financial services sector, which is not, let's say, the most common sector where W&I is applied. But even then, as we're able to see, it may provide a sort of a viable element to the transaction. So what happened there is that there were a number of portfolios of loans and sort of other financial products, some of which the the selling party did not fully disclose. And it turns out that some of the underlying litigation proceedings led to a result that was adverse to that what had been disclosed. So there was a claim being made, or various claims being made, to recoup this from the insurance company. I think what happened was that at the end, that the client or the policy holder was able to recoup this from the insurance, though the way to get there was maybe an example of where it could be optimized further. So, for example, I think in this case, I mean, Marcin has stressed that choosing the right insurer isn't only for its underwriting speed or, let's say, its ability to get the policy issued quickly, but at the same time, you will also want to consider how, let's say, nimble or how sophisticated an insurance claims department is, because when you get to actually needing to levy a claim, the deal is over, and maybe there's less pressure involved from parties to get things done. I think in this case, it turned out that there was a bit of a headway to be made to get the claim satisfied, but I think at the end, it is resulted in a positive result for the client. I do think what the parties need to be mindful of is also make sure that they formulate the claims pretty quickly, that they put together a sound factual basis for a claim to the insurance, because obviously you need to consider that the claims department was not involved in the transaction from the beginning. They need to sort of work themselves into the case from the beginning. And let's say the more concise and the more sort of credible you put together the materials, the factual basis, and also what it is that you're requesting from the insurance, let's say the more streamlined and the more easy at the end of the day, you're able to recoup your damages that you believe you paid for by purchasing the insurance. So I think there is a bit more, let's say, development to be made in also focusing on the post-issuance of the policy and getting also the policyholders' processes in line to make sure that they cater to the claims situation appropriately.
Marcin, according to your statistics, how frequently is W&I insurance enforced, and what is the success rate when it is used?
Sure. So we at Marsh have been in this business for quite some time now, and we have been gathering statistics which provide some meaningful and interesting conclusions. We regularly issue transactional risk claims reports, and the most recent issue was actually released last year and relates to the years 2017 to 2021. And first of all, it shows that roughly 15% of W&I policies receive a claim. So in other words, about 15% of transactions which Marsh helped to insure resulted in a warranty breach. And in my opinion, it's a quite significant ratio. Secondly, the most commonly reported claims under W&I policies relate to financial statements and tax. And if I remember correctly, together they accounted for more than 40% of all claims notified under policies that were placed by Marsh. Interestingly, these two warranty breach types were the most common in our previous reports, and in our previous report that was released in 2019, and we actually do not expect changes going forward. When it comes to claims actually paid by insurers, this has improved, and this again reflects also the competition against the insurers and their investment in claims teams. And on policies on claims that were notified to the insurers through Marsh, actually 89% of the claims up until 2021 have been paid, and only 11% have been denied. And when it comes to quantum, a claim payment under W&I policy can range from tens of thousands US dollars to actually multi-million payments. Since 2017, W&I insurers have paid more than $500 million to Marsh clients, and this includes also the CEE region, where we have already seen first payments under W&I policies.
Wow. Marcin, Alexander, Saša, it was a pleasure. Big thanks for your time. To all of you who were listening, watching, thanks for joining us. If you would like to see our previous episodes, you can find them on our website, CMS website, and you can revisit them through your LinkedIn profile if you wish so. Until next time, stay safe and enjoy life.